Good day, YouTube. This is Jay Money with Falling Forward Financial. Just an update here on Bed Bath & Beyond. They've talked about them a couple times here on the channel. Used to have some shares sold out, and been hearing some talk about it. They're trading again, so just kind of crazy. Some of these meme stocks just kind of stay out there and keep trading, but again, this is Bed Bath & Beyond, ticker BBBY. Here you can kind of see what they've done over the past year. They're actually down over 50%. Looks like it was in the $27 range. I think my cost basis was about $20 on it when I was in, and or $18. Sold it and made a little bit of a profit when it ran up the last time. But it's actually in the green in the past 3 months. Up over 54% here in the past month, which is just kind of crazy action, which is up over 169%. Here in the past week, so you could have got in there under $10. Actually in the $5-6 range, and then it had the run up here. That would have been the time to have gotten in on this one. And here's a look at what it's doing today. So, like I said, I've talked about this one in the past. It's a smaller retail store. I actually like their products. I got into the stock back in 2017. Word was Amazon was looking to buy them to do fulfillment centers like what they do at Kohl's and wherever else they do them right now. So that's why I got into it and thought it was going to be acquired by Amazon, and then wasn't. So but been around since 1971, a $1.15 billion market cap, high today of $15.15, low of $14.10, high of 52-week high of $30.06, and a low of $4.38. So wow, could have got in there. They used to have a dividend on this one as well, and you can see the volume there, the average of 143, and today 23.19 million. So, and here's a look at their ratings currently as a sell, and the earnings expected on September 29th. So here's where I bought some. Well, this is a partial share. Don't know why that was a partial share. That's kind of bizarre. And here's a lot of the other stocks that follow this category. I've traded all of those, talked about all of those a time or two. Bed Bath & Beyond will unveil its turnaround plan Wednesday. Here are 5 issues investors want addressed, and as you can see, this just came out today. So Bed Bath & Beyond will share its turnaround strategy Wednesday as it struggles with slowing sales. Investors want to hear Bed Bath's plans to replenish its cash coffers, to pay suppliers and take care of other expenses. In-home goods retailer may also provide updates on its push into private labels and efforts to win back customers. Come on in and see what's new. So I've always liked their products. It's just, I don't know why the stock hasn't done better, but on Wednesday, the troubled home goods retailer is expected to lay out plans to win back the confidence of investors, suppliers, and shoppers. So we'll see what happens. So the Bed Bath & Beyond has been especially turbulent for a few months. Earlier this summer, its board pushed out 2 Target veterans who helped shape its turnaround strategy, CEO and CMO. It drew criticism from activist investor Ryan Cohen, who went public with his stake in the company in the spring. Its stock of a darling meme stock Frenzy rocketed up and then plummeted when Cohen sold off his shares. Its shares rallied on Monday, rising nearly 25% at the close to $13.35. Potential cash infusion. Key part of the announcement will be clarity about how Bed Bath plans to replenish its cash coffers to pay suppliers, take care of other expenses, and keep investing in the business. The net loss widened in the most recent quarter as sales slowed, and the company ended May with about $100 million in cash, down from $1.1 billion a year ago. That's quite a difference. That's over a $900 million difference. As shares of the retailer were swept into the meme-fueled run-up in early August, the company said it was working with financial advisors and lenders to strengthen its balance sheet. Retailer has not shared details about how it would accomplish that. Wall Street Journal reported last week that the company and asset Sixth Street partners are nearing final terms of a loan of nearly $400 million. That doesn't sound good. Your liquidity position can be strained as you move through the year, and seasonally oriented retailer because you're building working capital. If Bed & Bath secures extra cash ahead of the holiday season, it can put off the questions about financial stability and focus on fixing its business. Luring shoppers back. Last I knew, they used to send out coupons all the time, 20% off. Sometimes it would be, a certain percentage off if you'd spend $100. Shoppers can easily buy household items like towels and kitchen gadgets at places like Amazon and Target. And I'm sure some of the same products you can probably buy at Amazon. I haven't bought any kitchen type items. All of mine are from Bed Bath & Beyond, so... but the problem I have with Bed Bath & Beyond, and I think a lot of customers with it, is that it feels like, why would I go there? Headlines about the dire financial state could be a turnoff for customers. Professor Management Strategy, Kellogg School of Management. For now, Bed Bath & Beyond may want to turn its tried and true strategy of giving away tons of, just like I said, 20% off coupons. Discounts may be a quickest way to drum up store traffic. They've been doing that for close to 20 years from what I remember. By over the long term, Bed Bath needs to think about a smarter way to stand out. A retail consultant of the former Sears executive over troubled retailers have found a way to forward Best Buy added services like Geek Squad, and sales of merchandise like CDs and DVDs have faded away, while Petco and PetSmart launched private brands and added vet care so they didn't just compete on pet food prices. Merchandise riddle. Bed Bath and its rivals sell many of the same national brands, such as KitchenAid, Nespresso, and Mikasa. To differentiate themselves, Bed Bath went head-to-head with competitors like Amazon and Macy's on price. Strategy has faced scrutiny as Bed Bath sales have declined. Same-store sales were down 12% and 24%. Supply chain fixes, so they just got one problem after another. So during the holiday quarter, the retailer said it missed out on about $175 million in sales because of being out of stock. So, wow, better start stocking up now, is what I would say. There's already Christmas trees out at Costco. Bye Bye Baby. Earlier this year, Bed Bath's Baby Goods brand appeared to be on the auction block. A potential sale or spin-off of Bye Bye Baby gained traction in the spring when Bed Bath agreed to explore strategic options for a banner of a part of a truce with Cohen. In June, Kohl's terminated talks to sell its business, citing deteriorating retail environment and tough backdrop. In June, Kohl's terminated talks to sell its business, citing a deteriorating retail environment and tough backdrop for pulling together financing. Walgreens also scraped plans to sell its UK-based Boots business because of changes in the global market. So lots of changes going on, or that could possibly going on. Inflation shot up, businesses' profitability started to get tighter, and boards were trying to figure out which way is up. And so feel free to pause and go over the rest there, but if Bed Bath does find a buyer for BBBY, however, it's risk losing one of its brighter spots. Saunders of Global Data said the baby goods business tends to be steady even during tougher economic times. Currently here on Bing, showing Bed Bath as a sell with an upside to $3.50, and it's already at $14. Here just kind of goes over some reducing stake in Bed Bath & Beyond. This is dated here today. So, Advisor Group Holdings lessened their position in shares of Bed Bath & Beyond by 50.4% in the first quarter. That's quite a lot, so I'm not going to read all of that to you, so feel free to pause and go over that if you'd like to read that there for yourself. Bed Bath & Beyond stock rockets ahead of strategic update, and as you can see, this was just out an hour ago. Here's a look at one of their carts. Shares of Bed Bath & Beyond soared Monday to buck broad market weakness for the second day as the meme stock investors express optimism ahead of the home goods retailer strategic update. Stock rocketed 24.8% to close Monday at $13.35, while S&P index slipped 0.7%. Stock shot up another 10.6 in the pre-market trading on Tuesday. On Friday, the stock had climbed 5.9%, while the S&P 500 tumbled 3.4% after the company's announcement that it would hold a conference call on August 31st to offer a business and strategic update. Recent gains also followed a report in Wall Street Journal and said the retailer had struggled with liquidity issues and slumping sales, and margins was nearing final terms for a loan of close to $400 million. Stock's rally also helped provide some intraday support of other meme stocks. GameStop shares have reversed an earlier loss as much as 1.8%, lost 1.9% on Monday for the first gain in 9 sessions. AMC Entertainment stock climbed 3.3%, pairing with earlier as much as 2.8%. So it still kills me those stocks are being traded, but more power to the people on those. I sold out of them long ago. Like Bed Bath & Beyond, this turnaround stock is far more promising. So again, following Ryan Cohen, like I already went over, we're left sorely disappointed when revealed that he had sold his entire stake in the company, 9.4 million shares, plus options. The about face by the founder, former CEO of Chewy and chairman of GameStop was abrupt, as Cohen owned about 10% of the company. Hopefully I'm sure he did make a profit, but it was only in March that Cohen had pushed to gain 3 new seats in the board of directors. Cohen's call options, far out of the money strike price of $60 to $80, had some investors excited that the shares of the beleaguered home goods retailer could make a run to that level. Instead of trying to parse the moves of the high-profile but fickle investor, folks who are interested in a turnaround story are better served taking a look at shares of Foot Locker, a retailer with some of the intriguing catalysts of its own and a lot more potential than Bed Bath & Beyond. So, biggest catalyst, new CEO, shares of Foot Locker gave a major boost when the company announced that Mary Dillon, the former chief executive of Ultra Beauty, would take over CEO in September. So if you have Foot Locker, you can leave that in the comments. That would be interesting to know. I have never covered Foot Locker myself, so retail darling, Bed Bath & Beyond extends rally ahead of the strategic update. As you can see, this is just out 16 minutes ago. Shares look to set to extend their rally on Tuesday ahead of the strategy update, and struggling retailer this week sparked hopes of the company nearing a funding deal of about $400 million. Its shares climbed 9.2% in the pre-market trading, adding to another 30% rise in the last two sessions since the company reiterated it had more of a conference call to provide a business and strategic update on August 31st. Bed Bath & Beyond long-term debt totaling $1.38 billion and only $107.5 million in cash as of May end. So if you have Bed Bath & Beyond, list that in the comments along with your cost basis, and if you're still doing any of the other meme stocks like BlackBerry or AMC, any of the other ones, that'd be interesting to know as well. Not much there in Reddit. Currently at 14.18 here on StockTwits. Don't know what just happened to that. Over here on StockTwits, currently at $12.46, low of $4.38, high of $30.06. Downloader ladder getting close to the bottom. It's almost like they dump the entire market at the same time, prevent memes from winning and going parabolic. No buying pressure, no way this evening is going to be good news. Lots of talk going on this one, that is for sure. Over here on MSN Money, showing it as a strong sell. 448 is what their predictions are. So, but if you have Bed Bath & Beyond, like I said, go ahead and list that in the comments along with any other comments on this one that you'd like to share. Looks like it's just got a major drop off, so who knows what's going to happen with this one today, but I am staying away. If it gets back down to the $5 level, I might pick up some, but that's probably a ways off. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.